After 5 years, I've finally solved day trading and I've condensed it into a simple PDF that literally anybody can use to become a consistently profitable trader. This is the real deal. This strategy works. It's simple. It's easy. There's no complicated daily bias. And if you don't believe me, go look at all these traders on screen now who have already become profitable with this strategy. Okay, so for this strategy, what you're going to do is you're going to get onto whatever market you trade. And by whatever market, I mean literally any market that you can find on TradingView. This will work for. And you're simply going to get onto the 4-hour chart and you're going to mark out the most recent fair value gap in price action, right? Now, there's a lot more that goes on behind the scenes, which you don't need to know. All you need to know for this strategy is that it works and that it will make you money. And if you don't believe me, go and try it, right? So mark out the most recent fair value gap on the 4-hour chart, right? Which is this big bearish fair value gap here. And if you don't know what a fair value gap is, go look at this picture on screen now. It's a very simple pattern. Now, fair value gap itself doesn't make you money. It's the logic behind it that does make you money, right? So this is the 4-hour fair value gap. Just make it a bit more clearer. Now, can you see how price touches the 4-hour fair value gap, right? The moment price touches the 4-hour fair value gap, we're going to get down onto the lower time frames and we're going to see what price does. And what we want to do, what we want to see is, let's imagine, right, this isn't the 4-hour chart anymore. Let's imagine this is the 5-minute chart or the 1-minute chart. What we want to see is price hit the 4-hour fair value gap, quickly move off on the lower time frames, leave another fair value gap that we can enter on, and ride price down, right? We want to see confirmation that we're on the right side of the market. So let's get onto the lower time frames and see what we can see. Okay, so here we are on the lower time frames, and you'll see in the PDF in the pinned comment down below that I give you examples on the 15-minute chart, but literally any time frame less than the 4-hour chart, this will work for, right? So make sure you got the PDF down below and just follow it along with me. But right here is the 4-hour fair value gap. Now, do you remember how I said on the lower time frames, what we want to see is we want to see price hit the fair value gap, the 4-hour fair value gap, shoot off, give us a retracement on a new fair value gap, and ride price down. Do you remember me saying that before? Hopefully so. And this is exactly what we have here, and this is what we want to see, right? This is what, this is how we make money using this strategy. Now, I'm not going to explain the logic behind this, because I want this to be a simple, no BS video. Use this strategy to make money, right? Like, I'm a very practical guy. I don't want to talk about theory endlessly, but here we go. Here's the 4-hour fair value gap, right? Now, we can't just randomly start selling at this fair value gap. We're not just going to randomly sell here and just hope and pray that price goes down here, right? Because we don't know where to put our stop loss orders, right? We don't really have any confirmation. You could put your stop here and target a 5-to-1, only to see you get wicked out. The price goes straight in the opposite direction, right? So we need to wait for some sort of confirmation that the market is actually bearish, right? Who knows? Price could have gone all the way up here. So we need to see confirmation. And the easiest way to see confirmation is, first of all, wait for price to hit the 4-hour fair value gap, and then wait for a bearish fair value gap to form in the opposite direction, right? That right there is confirmation, right? I'm not going to get into more detail on that, but that is confirmation from smart money or whoever, market makers or whatever you want to call it, central banks, that this market is about to reverse, right? The fair value gap is confirmation and is always used by smart money for their entries. So really, really important there. So now remember, this is the bearish, let me zoom out. Actually, it's on the 1-minute chart. We won't do this. Again, I don't want to, I'm not going to explain this in too much detail, but this is a bearish 4-hour fair value gap. Remember when we marked it out before? This is a bearish 4-hour fair value gap, which is why we're going to wait for a bearish fair value gap to form on the lower time frames, which shows us we're on the right side of the market. So what we're going to do is we're going to mark out the new fair value gap that forms. Now, some of you might notice this little gap here. Now, again, just because it's here in price action, I'm going to explain it to you. This is called a volume imbalance. Now, you don't need it for this strategy. See the gap between this wick here, that is a volume imbalance. Now, you don't need that at all. I mean, look how price beautifully respects it and shoots off. But anyway, and again here, right? Anyway, you do not need this at all for the strategy. It's just here in price action. This is a very strong fair value gap, right? A volume imbalance is a very strong fair value gap. Price will always come towards these volume imbalances here, right? So just a little nice fact to know. However, for this strategy, all we care about is the actual fair value gap itself, which is the gap between this candle here and this candle's wick here. So it does include part of the volume imbalance. So this is our new fair value gap, right? So just to summarize, remember, get this up. Here's the 4-hour fair value gap that price touches, shoots off, it leaves us our new fair value gap that we enter on, ride price down, right? That right there is a beautiful setup, absolutely beautiful. And there's a lot more that goes on behind the scenes, but again, this makes you money, right? This makes you money. You saw proof right at the beginning of the video, right? And again, as a trader, all you care about is making money. Don't You hear people say trading is a degree. It is not. It's a business. You are here just to make money. You are here to retire your family, make 10K a month, build generational wealth, and move on with your life, right? You're not here to study endlessly, which is a mistake I made for years. But anyway, some little big brother advice there. But what you're going to do for this strategy is going to enter on the fair value gap. Now, someone was saying, hey, you know, where do I enter on the midpoint? When you're bearish, just enter on the lowest point, right? It's very, you know, with this strategy, you're going to get a good, you know, win rate and risk to reward ratio. So you don't need to finesse your entries at all. Only people with a low win rate need to do that. Regarding your stop, just put it at the high. If you want to put it higher, you know, by all means do it, but just put your stop at any logical position, right? Any logical position will do. And then for your take profit, the easy part, you're going to target at least a 3-to-1, right? Now, personally, this is what I do. However, I'm showing you this on the 1 minute chart. If you're going to trade the 1 minute chart, in my opinion, you may as well target more than the 3 risk to reward ratio, right? If there's any time frame where you're like, hey, Steve, I want a passive prop firm, I want a, you know, a crazy risk to reward ratio, the 1 minute chart, that's the time frame you're going to do it on. So for me, what I would do, if I was trading the 1 minute chart and I wanted to get as much money as possible out of the move, I would just target this easy liquidity pool right here, right? And if you don't know what liquidity is, it's simply highs and lows. I say simply, way more complicated than that, but that's all you need to know, right? And there's plenty of videos where I talk about liquidity, but this low here, easy liquidity target. Now, some of you are very eagle-eyed and you might realize this is actually not at a key time of day. This is just before London session, which is around at 2 a.m. Eastern, right? So the highest probability A+ setups will always be during a major session. However, if you've been trading for a while, you know you won't always get that. So if you want to trade outside of a session, this is how you do it, right? This is how you do it. Don't go, you know, if you're trading outside of a major session, don't do anything crazy. Don't start targeting, you know, previous day's low or whatever. I know you get it here, but you know, if you want to target, if you want to scalp outside or day trade outside of a major session, this is how you do it, right? You quickly enter on your fair value gap like this. You take a free risk to reward ratio, or you target the low and you get your money and run. I always say this, get your money and get out of these markets. They're very, you know, complicated and they can quickly reverse, right? I mean, just look at this. And this is live price action, by the way. I was bored watching this, so I thought, let me make a video explaining this. But anyway, you can get the full, completely free PDF to this strategy in the pinned comment down below. And if you want to learn more about liquidity, which will literally turbocharge your win rate, go check out this video on screen now.